What's happening, traders? We are back again with another video, and you can see that I've got these dual monitors set up, right? But this one is still not working. So first of all, I ordered a really shit HDMI splitter, got a new one in, still not working. Found out that it's probably one of the HDMI cables in the new monitors that's not actually connecting with it very well. So tomorrow I'm going to go and get an HDMI cable plus a VGA cable just to make sure, because I think this new laptop that I bought doesn't supply the graphic card that will actually make it work via two HDMI cables. So non-technical guy like me is really fucking up right now. But nonetheless, I have got back to the markets, I should say, around 2 days ago. Haven't looked at it, not even once, in terms of trying to check levels and see where I'm at and so forth, right? And I noticed something and it really, really pissed me off. And probably many of you are actually doing this right now, but me, I've been quite stubborn, just headstrong in the way I'm doing things. And this will probably make either it will make so much sense, or it'll just be like, Atlas, you're an idiot. You should have been doing that ages ago, right? But it would all make sense in a bit, so let's dive in.
So here we are on the New Zealand dollar yen, and I hope you have been extremely safe out there, guys, because with the news that's been coming out recently, I've been seeing, I noticed oil has been whipsawing, like just going up, down. It's been doing some crazy stuff. And I'm just like, fuck, I hope you guys have not been getting killed out there, just been patient, sat back, and you know, just wait until that thing finishes doing what it's doing, and then, you know, the market's going to run in whatever direction it's going to run in. But nonetheless, here we are on the New Zealand dollar yen. Let me just decrease this so we can get more real estate. So as you probably know, guys, and if you're new to this channel, you'll have to go back into one of my other videos. Let me just draw some lines up for you. I got in on this, as you can notice, I've gone to the dark theme. I've gone to the dark side. The force is strong with this one. Kind of like it, actually. It's pretty, what am I doing? It's pretty cool. So if you was watching some of my previous videos, you'll know that I got in around, I think it was at H1 level. If you just zoom back, just want to make it clear for anyone who missed this. Okay, so yes, here we go. So we had this area here as the event break. Or was it this area? Was it this? Yeah, it was this area here, I think it was. No, actually, my bad. It was this area here as the event break. Okay, and so we took this area here as our long, sorry, and the market touched into it nicely. Let me just move that down, so like a bit of perfection. Touched it, pinpoint, and moved up from there nicely. All right, now let's just go out to the daily. So I told you guys in one of the previous videos that once we reach this area here, where are we? Is this? Oops. Yeah. So when the market moved up into this area here, we can see already that the market's been here and gone quite deep into this zone. And number one, you know, this is well outside of our range. So this was created in 26 days, and when the market moved back up to it, it was like 52 days, right? So in reality, not really making the assumption that this market is going to come to this zone and then push back down. It could do. We'll play the event chain and see what happens, but that was definitely not my assumption at all, as the market was in here and it went really deep in previously, right? So I told you guys in a previous video that my assumption is that the market will come into this zone, we'll see some friction, and then the market will move up again. All right. Now, this is where your boy really messed up. And this is why it's going to change the way I trade in the future. And it's going to allow me to make more profit and trade less, which is simply the goal, right? So what I noticed is that I thought, because when I got into this trade, I came out of this trade. I'll tell you how I got out. We've got a price range. Let's get that there where my entry was. And I came out and I got out of this trade. The market took me out because I had my stop loss here, right? So I come out of this trade with 177 pips, right? 177 pips. It's not bad. It's nothing to moan about, right? But then the market then proceeded to move up to this area, which would have been a good target area. Let's just move this up. 611 points. So I missed out on a ton of points here, like a ton, right? Now, if I knew that, or I made the assumption, I should say, I can't know anything. If I made the assumption at the very beginning when this market hit here, that the market was going to come up here, we're going to have some friction and then move by it, why did I move my stop down to this area here? Why was I so conservative? Why did I want to protect the trade? Why did I want to come out with some profit here? Because multiple things, right? How my brain was working. So number one, it took, let's think about this. It took, it's the wrong one. Let's move this actually. And let's grab this one, date range. So it took from entry, it took 10 days, right? So it took 10 days to actually get into the zone, right? So that you can call that like your first profit area. So it took 10 days from entry, okay? But then once it went into that zone, it took 24 days before it decided to push up again. 24 days. Now, guys, I've held trades for quite a while. But when the market is consolidating for such a large period of time, your brain begins to play tricks with you, right? It begins to have thoughts that don't comply with your initial assumption. I guess I started thinking, well, you know what? Maybe this market's going to actually come down now. It's consolidating for a while. Maybe it's not going to go in the direction that I assumed. And I'm thinking to myself, do you know what? I don't want to come out with a rubbish amount of pips. If it just decides to dive down and I'm not in the position to see it because I'm at work or something and blah, 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 I haven't set the right alert and the market comes down and I come out either at break even or something like 50 pips or something like that, I'll be pissed, right? So I then proceeded to move my stop up to this area, which is that 177 pip mark, right? Around this area, just here, that's where the market took me out with this drop here. Now, fair enough, my brain may have been making all types of assumptions around this consolidation area, this friction area, which I assumed was going to happen when the market reached there. But if I had just done one simple thing, I would not have been worried about this consolidation at all. In fact, what I would have tried to have done is to add a position every single time, even if it put me at a loss sometimes, to add positions to this trade to then move towards, so when the market does move to the upside, I'll have multiple positions added to this trade and I can just sit back and literally relax. One thing, and you're probably all in the know about this already, but I'm just coming to this right now, right? If I had moved to the monthly chart, okay, just to the monthly chart, what can we see? What can we see, guys? We can see that since this coming to this daily level here, what is this? What's this? This right here, my God, hot diggity damn, is profit potential, right? This is all profit potential. So if I can see this on the monthly chart, watching the consolidation on the daily, is not going to make me feel in any way concerned that I should be coming out of this trade or moving my stops closer, because my emotions are producing different thoughts, which are then changing from my initial assumption. So now, in hindsight, if this was something that I was aware of, as I said, I'd be adding multiple positions, right? Adding multiple positions. And then once the market has broken out, I would then probably place my stop loss just above this area here and just let the markets do a thing and have my target and have my take profit at this high. So I am going to be taking assumptions, not from like monthly levels. I'm just going to have monthly levels now charted, right? So I know where I'm at in the grand scheme of things. Okay, so I'm going to be having monthly levels charted. And I thought to myself, Atlas, like, that was so dumb that you haven't even thought of this before. And I even think some of you guys have even told me, but due to my stubbornness, I'm fixated on one thing and trying to get that thing right. I'm not seeing any other fucking time frames, right? You guys know that I just delve in the daily, the H1, the 15-minute and the 5-minute, especially when it comes to trigger events or maybe event breaks if necessary, but mainly the daily and the H1 is my world, right? Sometimes if I want to refine it, like I did on a few hours, you'll see me go down to like the 15-minute time frame, looking on event breaks, but then you still have to watch out for H1 event breaks above just in case. But if we look to the monthly now, it makes life so much easier because you can see the profit potential. So when you're looking at the daily chart, it's like this consolidation, is nothing. You just have to be a bit more patient, right? Simple as that. So that is literally all I have for this video, guys. This is more of a long-term view. At the end of the day, I'm still in the process of trying to find the right trade, number one, making sure that I can stay in it for a while, because I'm aiming for I don't even know what that trade would have been. It would have been a disgusting risk reward. You guys know that I'm into risk rewards of like minimum 5 to 1, but we can see like 20, 30 to 1 with the trades that we're using with supply and demand, right? And using the event chain. But this would have been a monster trade if my awareness was a bit more open to the higher time frames to really understand the longevity of a trade once I actually get into it. So I hope this video has been of some value to you. I hope it's been useful. And guys, if you haven't, the link is below to the books that you can get to understand the wider picture of actually how the market works. Don't forget about that. I'm getting so many comments on people saying, oh my God, these books are absolutely fucking amazing. Literally changed the way I view the market. And I knew this would happen because there's literally no information like this out there in the market. You don't even get that shit in paid courses, right? I've had people telling me that they've come from OTA, right? And that information isn't even in the courses there. So it's astounding to me the misinformation when it comes to supply and demand trading that is out there and how many people are touched. Look, guys, right, that supply and demand is my world. This is not a fucking strategy that I use and next week I'm telling you about another strategy and then the week after I'm telling you about another strategy and how this strategy is better. It's like, no. So when I see all of these like supply and demand traders videos out there, I'm like, what the fuck? Like, you've just told me about 6 strategies in the space of 2 weeks, and it's like, what am I meant to do with that? Like, what am I meant to do with that? So if you guys are die-hard fans of supply and demand trading and, coming to use my event chain, then those books will blow your mind and open up your world to what is possible, because it's all about your understanding of how the market works, which will allow you to demonstrate to yourself the true potential of how far you can go with this.